Let's wait one more minute for everyone to join. So Todd, you're in Baltimore right now.
Yes.
So we have London, USA from the panel, and then we're getting a lot of people from different countries coming in. We have people joining from YouTube, Live, Zoom, and LinkedIn. So, Sam, it's going to be a very exciting show. I think what I've seen for MoneyHub is really one of the most interesting fintechs I've seen in a long time. And
no argument here, Nicholas, from that.
So I think we're going to start. It's 2 past the hour. So good afternoon, everyone, or good morning or evening if you're in another part of the world. Welcome to Visionary Talks, Corporate Vision Show, where we invite amazing experts that will tell you what is coming next in every industry. Today, we're looking into the amazing world of fintech. We have a very international show today. As I can see, we have people joining from all over the world. So the topic of today is fintech is exploding, but is it making the world of financial services more human? This is the question. And that's what we're going to be looking at today. We're going to see fintech across the decades leading to its role today as the force leading change in the financial services industry and beyond. I'm Nicolas DeSantis, your host. I'm the CEO of Corporate Vision. And we have amazing guests here today. We have Sam Seaton, the CEO of MoneyHub. We have Todd Rupert, former CEO of T. Rowe Price Global, a fintech investor and board member of INSEAD. Jill Jackson, managing director of the Big Exchange, and Paul Goodwin, partner and proposition leader, UK Wealth, Mercer UK. Welcome to you all. So we want to make this show very interactive. So I'm going to explain a few features of the Zoom platform that you will be able to use during the show. The event is being recorded and we'll be providing a recording of it in case you miss anything important and want to get back to the insights of the show later. In terms of social media, you can follow us at Corporate Vision. And if you're going to use social media, hashtag Corporate Vision or Visionary Talks. We're going to be running opinion polls during the show where you will be able to vote on key questions related to tonight's show. In terms of Q&A, questions will be answered live on air or in writing. You can do those questions anonymously if you prefer. So use the Q&A button at the bottom to provide to us those questions. The agenda for today is we're going to look at the world of fintech first. Then we're going to look at the MoneyHub story. And then we have how customers are actually using MoneyHub. And we have Mercer here and the Big Exchange to do that. And then we will end the show with questions from the audience. So number one point is the world of fintech. And here we have a very interesting beginning with financial innovation in the 1890s Traveler's checks were a necessity for traveling abroad. You couldn't go abroad without traveler's checks. And although they were paper documents, they would work as cash and, become local currency, and you were able to pay merchants. So when we look at financial innovation, we can see that over the decades, companies have been adding products and services like Visa. When it began in 1958, Bank of America gave us the first credit card program for middle-class consumers. So when we look at another, obviously huge innovation in the 60s, America's first automatic teller machine launched at New York with the Chemical Bank using PIN technology. That eliminated for the first time the need to go and visit the bank to conduct basic financial transactions. In 1983, we had another innovation, Grameen Bank. It was born to provide microfinance in Bangladesh. It made small loans known as microcredits without the need for collateral. That was a big innovation, the lack of needing a collateral to be able to get a loan. So women make 97% of the members of Grameen Bank. Another innovation that still goes on today, and this was launched late 1980s, is the 24-hour telephone bank, First Direct. They were the first one to become a full telephone bank. Today, they are a fully digital bank. They have 1.64 million customers, and it has been awarded in 2019, still today, the most trusted financial provider by MoneyWise. So we're looking at these different innovations over the decades. And I have a very personal experience in the world of fintech, because 20 years before crypto, I launched the first digital currency. It was called beans.com. This was 1998. We raised $100 million from people like Larry Ellison of Oracle, Francois Pinault of Kering, Li Ka-shing of Hutchison, and Carlo De Benedetti from Olivetti. We became the first digital currency of the web used by consumers, and you could spend the beans that you could collect online with a MasterCard. We did a deal with MasterCard. So the company and its patents were sold to Carlson Marketing, but we managed to get 5.5 million accounts, and we started to prove that the public was ready for a digital currency. So as we enter now the 21st century, finance and technology are coming together. Fintech can serve the back end or the front end of financial operations. Most likely, most of you in the audience are already using it in one way or another. It includes a huge range of startups, products, business models, and technologies that are transforming the financial services industry. You can see some of the underlying technologies. And who better than Todd Rupert, who is an investor in and the advisory board of many companies in fintech globally, including MoneyHub. He's going to give us a high-level overview of the fintech space. Todd, welcome.
Thanks very much, Nicholas. As Nicholas said, fintech lies at the confluence of financial services and technology across the entire fintech service ecosystem shown here. And it's huge, accounting for 17% of global GDP. And across the board in all of these areas, traditional financial service providers are being disrupted, deconstructed, and reconstructed. They're being forced to evolve in order to better serve individuals and businesses. Digitization in financial services started growing in earnest following the global financial crisis. But the COVID-19 pandemic significantly accelerated the world's migration to a digital economy and has birthed many new fintech opportunities. The transformation taking place in financial services is truly enormous, and I'm extremely bullish about the profound benefits that have and will continue to accrue to individuals and businesses enabled by financial innovation. Over the last decade, there have been almost 14,000 fintech companies founded globally with over $230 billion in venture capital funding. And you can see the impact the COVID-19 pandemic has had on new fintech company creation, with 2,370 created thus far in 2020. All of these thousands of fintech companies are either disruptors or enablers, poised to improve the global financial services landscape for individuals and businesses. With this increase in new fintech companies and their new innovations, fintech adoption by individuals has been remarkable, growing from 18% to 75% in just 4 years. And this is before the impact of the pandemic, which has further accelerated adoption. The major drivers of the adoption have been China and India and Brazil, so there's much more global penetration to take place. In the same year that Nicholas's Beans was founded, 1998, PayPal was born as a digital wallet, an electronic money transfer business, originally for peer-to-peer transfers. Today, it's worldwide online money transfer business operated as a payments processor for online vendors, and it's now worth more than every US bank in the US except JP Morgan. A decade after PayPal, M-Pesa pioneered a mobile banking system accessible directly from mobile phones to transfer money, pay bills, or request loans. It's one of the initial companies to serve the billions of people in the world that are unbanked. A great example of humanizing financial services. Today, 96% of households in Kenya use M-Pesa. And there are now numerous contactless payment apps providers by fintech startups and the big tech firms, far more than is shown on this slide. Two I'll highlight are China's Ant Financial, which is the largest fintech in the world. Its payment product, Alipay, managed $15 trillion in payments transactions last year. The other is STC Pay in Saudi Arabia. With a recent funding round, it became the first fintech unicorn in all of the Middle East. Traditional banks are in a tough spot, burdened by their legacy systems. This is an example of a well-known tech brand, Apple, partnering with a financial services firm, Goldman Sachs, to, again, provide incremental services to its customers. So you're seeing the tech firms and the financial firms moving together. And a big example here is Google. In 2021, Google will launch Google Plex, offering its users a checking account in partnership with banks. Already 11 banks have signed up. The checking account will be integrated into Google Pay, which is also being upgraded with some cool features, including providing insights into spending and personal financial management options. Google will provide the front-end user experience, and the banks will provide the underlying financial infrastructure and deal with financial regulations. For banks, the partnerships can be a way to quickly increase customer deposits, but Google will own the customer relationships in the brand. This potentially might backfire on the banks, but it'll be interesting to watch. We all know what a mobile wallet is, a wallet that stores payment card information. And this has enabled, you can go to the next slide. This has enabled the launch and quite significant growth of digital banks, challengers to the traditional incumbent banks. I show 4 here: Revolut in the UK, N26 in Europe, Kuda Bank in Nigeria, and Nubank in Brazil. But there are numerous more. Legacy technology constraints on traditional banks are substantial. For example, the 4 largest US banks spent $38 billion on technology in 2019, and 75% of that went to maintaining and upgrading legacy IT systems. These digital banks are unburdened by legacy IT systems and don't have physical assets. Plus, they also appeal to the younger mobile-first generation. So that's why you've seen such an increase in digital banks. Another area is digital wealth management, or robo-advisors. This was pioneered by Betterment over a decade ago, selling portfolio management services for 25 basis points using algorithms. There are many firms in the marketplace today, and each of them brings innovation, technology-led solutions to help individuals achieve their financial goals. Digital distribution of financial products is only going to continue to accelerate in the future. Another area is crowdfunding. Private startup company investing is risky, but it also can be very rewarding. The problem is that traditional venture capital investing requires commitments higher than most people can afford. On the capital raising side, most startups don't have the network to access venture capitalists. So made possible by technology, crowdfunding revolutionizes and democratizes equity investing, bringing it online and making it available to everyone. Investors can review deals, make investments, and manage their portfolios all with a few clicks of a button. Seedrs, a pioneer in the space and the first equity crowdfunding platform in the world to gain regulatory approval, raised money for digital banks Revolut, Monzo, and Tandem Bank, as well as for numerous other fintechs. And finally, blockchain, or decentralized distributed ledger technology, which is the rails that Bitcoin and other cryptocurrencies was built on. The crypto market today is now worth $1/2 trillion with daily volume of hundreds of billions. But blockchain technology has far, far, far more applications than just crypto. Symbiont being a leading firm improving the capital markets. Symbiont is supported by numerous financial institutions around the globe to develop smart contract blockchain technology to automate the capital markets. And Nicholas has told us that he's going to be doing a show on blockchain in early 2021.
Yeah, that's right.
Yeah,
That would
so
be
to conclude,
probably January, February.
yeah, so to conclude, thanks to FinTech, everyone on earth is going to have access to affordable and more human financial services. And as you'll hear from Sam, MoneyHub can help make any business a provider of financial services with a customer-first DNA, right products and services at the right time. So over to you, Sam.
Before Sam starts, we have the first poll of the day. I'm going to launch that poll. It's a poll you should be seeing on screen now. It's a triple whammy question. The first one is, do you know the value of your pension? Second is, do you know your loan to value ratio for your mortgage right now? And the third one is, do you know your net worth? If you were using some tools, online tools to know some of this information, you probably have some idea. Let's see how many of you actually have, we're still waiting for some pollers to. Okay. I think people are thinking about the answers. I can see they're taking their time, but let's see. Let's share the results. So interesting. Do you know the value of your pension? 74% say yes, 19% say no, 6% unsure. Do you know your loan to value ratio for your mortgage right now? 65% yes, 23% no. And do you know your net worth? 65% yes, 23% no. So Sam, what do you think about those results?
I think we've got a great audience that know their stuff.
That's good. That's good. Excellent. So we're going to move now to the MoneyHub story with Sam Seaton, the CEO of MoneyHub.
Thanks, Nicholas. Thanks, Todd, as well. It was a great start to the journey. Let me introduce everyone to MoneyHub, the open finance platform, which is trailblazing digital transformation. And why is it trailblazing? Well, because the retail financial services market is disjointed and it's still product-led. So although these companies in this area are much more customer-centric than they used to be, I still think they're very product-led and siloed. Open banking alone, which is the ability for consumers to share their data with other providers, is actually worth 7.2 billion on its own, and just in the UK. But actually, MoneyHub isn't focused on open banking alone. It's much more than that. To me, open finance is where we really need to strive to get to. And open finance means that we can help companies with their digital transformation really quickly, which means we can solve real world problems they have today with their customer base, one of which is a very low level of customer engagement for most companies, which they really do struggle with. And I really think that for the future that we're entering, that's an area we can just not accept for any company. So what the Money Hub platform really enables is that personalization at scale for everyone. For those of you that are not familiar with Money Hub, I mean, how do we do that? What is it? What is Money Hub? Well, it's white label or an API gateway. Our white label solution sits on top of the API gateway. So what you see in the white label is what sits underneath. And what's underneath is in that blue box. It's core Money Hub functionality such as sweeping money. When I go down the pub on a Friday night, those were the days for most of us in the world. But when you did that went down the pub on a Friday night, you can match that spending off your credit card, your mortgage, into your pension, into your savings, whatever you want to do to making saving money and doing better things with your money easier. That's one element of what we do in that kind of top level of the Money Hub functionality, along with being able to link your spending to your retirement, so you can actually see what I might retire on myself rather than people like me. Lots of different things that sit on top of the insight that you get from being able to bring all those data elements together, not just open banking, but pensions, mortgages, property, all really important to give what I call a holistic view of the customer, and then being able to actually categorize that data. We have a machine learning algorithm, which for some of you will be familiar with, Waze, which is a navigation app that sits on top of Google, and it can tell you when you're going to hit a pothole in 20 meters time. That same machine learning methodology is what we use to tell people what their transactions are doing in terms of their money, and when they're going to run out of money or when they're going to have too much money somewhere. All of that gives that personalized, direct client insight. And then we also have the ability to move money from your bank account to another bank account, so we can take action immediately, which is what everyone wants. No hanging around. And what does that actually mean? So it means that finally we get to this utopia where all of the Money Hub clients can actually service their customers, members, employees, from the beginning to the end, and wherever they fit in that journey. But it means that we can really genuinely provide a holistic customer view and interact with that customer when you want to interact with them at a time they want to be interacted with. And why am I so excited about this? I think the biggest thing for me is that we're moving into a world where we can no longer take data as a given that's ours to use without the consumer's permission. We are moving into a world where the only way you're going to be able to interact with a customer of yours is if you genuinely have their permission. So this consumer consent-driven data lake that builds customer by customer with the Money Hub platform that our clients get to have, I think we haven't understood just how priceless that is. The ability to personalize what you do with your customers and provide effortless insight for you as a business is a priceless asset. And what does that actually mean? Well, it means that you actually know what customers are doing, not just what they say they do. Two really different things in my experience. And then the insight. Let's forget people like me. I mean, there's just me. There isn't anyone like me. Anyone that knows me will tell you that. So, appreciate that individual, unique need that each one of your customers has, then be able to add value and action that when they need it. So open finance really enables all companies to delight their customers. So I've just given you a flavor here of some of the companies that are powering forward into this new mode of operation. So from robo-advisors to payday lenders, to cash management platforms, to building societies, wealth managers, these are the companies that are really advancing at speed. And just to bring it to life a little bit more on the next slide, These are just 4 different clients that are using the APIs to actually bring to life what their proposition is with their customers. So Lumio on the left is all about robo advice, but for the people that are young and uneducated and potentially don't really want to know too much about money. They just want it to work. Open Money is really looking at the whole the holistic customer and probably going to be, from my perspective, the new moneysupermarket.com. ARC is for tech entrepreneurs. It's a grown-up robo. And Sugi's all about what's your carbon footprint. So it's all very well us being very, animated about the world and the impact we have, but actually it's quite clever because they'll tell you what your impact is and the way you live your life and the way you spend your money. What's the impact you have?
Yeah, even within your customer base, there are very diverse needs.
Yeah, and I think then just moving on, I'd really like to introduce Paul Goodwin from Mercer's and Jill Jackson from the Big Exchange, because they're going to bring to life 2 of our white label solutions. And I think with no further ado, let me stop talking and let them kind of shine a light on how they're using the Open Finance platform to make inroads into this new world.
Fantastic to have Jill and Paul as well. So we're going to look into Mercer. And I pass the baton to Paul Goodwin.
Thanks,
Paul,
Nick.
ready for you.
Yeah, thank you. So hello, everybody. Really good to be with you. For those that don't know Mercer, we're a global HR consulting firm, and we help employers and pension scheme trustees look after the health, wealth and careers of over 100 million people globally. We are basically a B2B2C business. So most of our core client base is corporate and trustee. But more and more, we are recognizing that we need to, as Sam was touching on, provide individual experiences for particularly the pension scheme members that we look after. I'm going to cover 3 things: the problem we needed to solve, what we did and what happened. We worked with Money Hub initially to solve a UK problem, but we wanted one that could be applied globally should we look to take it outside of the UK. So big question for us is kind of why bother? What's to be gained either by the individual or the company they work for? And the answer is a lot. And as you can see on here, there's benefits here from an employer's perspective about being an employer of choice, getting better return on your benefits. But ultimately, none of that matters if we're not improving the outcomes for individuals. And we've got a real focus in what we're doing with Sam and the team on how we can help to engage individuals, particularly around their retirement planning. Engagement levels in the UK on retirement planning is shockingly low. So anything up to around 10% is seen as good. And I think, well, is 10% good, or is it a 90% failure rate? All right. So we kind of try and flip these on its head and say, how can we really help people engage with their retirement? What are the barriers to them doing so? So if we could move on, Nicholas, thanks. Traditional retirement planning and communication in the UK assumes that everybody should be paying as much as they possibly can into their pension because that has to be the best answer, doesn't it? Well, we don't think that way because we don't think people think that way. We think that actually to engage people, you need to help them understand. We've got 4 pillars: the control over their day-to-day, being able to be prepared for an unexpected event such as the car breaking down, the freedom to make some choices and having enough money to be able to make those choices, and then being on track for the future. Most pension communication assumes that everybody's okay and they've got the freedom to make choices and they can plan for the future. But that's just simply not the case. Right? What we need to do is to be able to help people, first of all, get control of the day-to-day, make sure they've got enough money left to last them through to the end of the month, then have enough money to set aside if there is a financial shock of some description. Then they can make choices. That's when retirement planning can really come into its own. And for us, it's only when you bring all of those things together in a holistic view and make it very individual to the person that you're talking to that you can actually then start to drive up engagement.
Paul, this is the most humane description of pensions I've ever heard before.
We're trying our best, Nicholas, in a very inhumane industry. So the question we asked ourselves is how can technology help? So we thought it could, but we just really wanted to get underneath it. So we used we use MoneyHub's core technology to try and think in the way that people think. And if you take this slide here, you know, particularly with COVID this year, how much shopping's being done online. If you take the old Walkman or cassette experience versus Spotify, or you take queuing at the bank versus online banking nowadays, everything has changed and we just can't see it going back. So we've got to use technology more smartly. So we've partnered with MoneyHub, and the reason we partnered with MoneyHub was twofold. Firstly, the technology, but secondly, the philosophy of the business. Right? We wanted to make sure we were dealing with a business that understood this is about improving outcomes for people. Right? This isn't about selling product. This is about making sure more people have a better retirement. And to do that, we've got to help them bring all of these things you see on the screen now together in a way that people can look at assets, liabilities, income, expenditure, and then start to build a picture of what their retirement is going to look like. So as I say, we linked with MoneyHub and we built Mercer Money. So if you want to move on, Nicholas. And what we wanted to do was use that core technology to really start to help people engage. All right? And you'll see on here, the first two screenshots there's nothing to do with pensions. And then what we did with the retirement planning section was just made that really nice and simple. And everything we do is all about focusing on, well, will it work for an individual? Will an individual understand it? Because pensions legislation in the UK, and I'm sure it's the same globally, is not simple, and it tends to get more complex rather than getting more simple. Yet the responsibility for how much of what people have to do with their retirement planning is shifting from the corporate to the individual. So more responsibility and more complexity in an environment where people are getting more confused, changing jobs more often, having more pension pots here, there, and everywhere. Right? And what we want to do is just really simplify it, bring it down to, okay, well, this is where you are. What are the next 1, 2, 3 best actions that you can take to really move you forward? And that was the ethos behind launching Mercer Money. And we've built it in such a way that we're constantly learning. So kind of that's what's the problem we're looking to solve. We engage with MoneyHub to do it. So what's happening? So I mentioned before that, you know, our industry in the UK has about a 10% engagement rate or a 90% failure rate, depending on your perspective. What's happened? Well, these 3 data points are actually really important for us. So those that give us a secondary email address, that's to make so that when somebody leaves an employer, okay, that we can continue to work with them. So when they leave that employer, they keep Mercer Money. They can continue, right, to use this tool. So if we've got that secondary email address, then we can continue that communication with them. 52% completing a full retirement calculator journey. All right, we were astonished by that. And 54% adding at least one account to the platform. That adding an account to the platform is critical.
Wow.
Right? And then adding more and more accounts to the platform is critical, because the more you connect, the richer the experience, right? The more you get from the tool. And we're finding that in droves now, that the more people are connecting, they're the people that are coming back again and again and again and again. Do you want to move on, Nicholas? So desktop or app was the question we were asking ourselves. Which way would it go? It's an absolute no-brainer, right? It's app all the way for us. You know, when you buy a property in the UK, people tell you it's location, 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 right? And I'll be crystal clear on this. For us, it's app, 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 right? So 86% of all the visits and 63% of all visitors come in using the app, right? So those that are coming in using the app, if you can do the maths, are coming in more often than those that are using desktop. But is it just young people? No, it's not. All right, we thought it might be, but our biggest chunk of users are those over 50. All right, those that are starting to really think about their futures, think about their retirement, think about some of the changes that they want to make. But we're not forgetting about the younger generation, because they're some of the younger generation are the ones that will have nothing but defined contribution pensions. They are going to have 10 or 11 jobs in their working life. They're going to have very complex financial positions, right? So we want to make this as simple as possible for them, and make Mercer Money the tool that they can take with them throughout their working lives, right? So it just becomes their go-to financial tool. So far for us, this is doing everything that we wanted it to do. It has been a game changer for Mercer in the UK. The partnership with MoneyHub is thriving. I think that comes down to 2 things. We both think about this is just about customers. If you get this right for the customer and you think about the customer, right, then all that you will do will constantly improve the experience. The second thing is the philosophy of the businesses are so aligned, right, that we have the right level of challenge, the right level of development. We share the best practice, right, and we've got our interests and customers' interests aligned, which for us is really helping to drive forward everything that we want to achieve at Mercer in the UK. So that's a kind of whistle stop of what we've been up to, and we're delighted with it so far. But we've, to quote ABBA, we've only, or was it, ABBA, we've only just, no, sorry, the Carpenters, we've only just begun, right? So a long way to go. So thank you. I'll pass you back.
Paulie, sounds fantastic. I think I'm very surprised also the Generation Z doing so much work on your app, on a product like this one, but it looks great. It looks fantastic.
Well, I think if you think about them as a generation, they've got some big challenges to solve, and they're happy to use tech to help them with it. And then, back to the point about getting them to connect more accounts, the experience becomes completely individual to them. And that's where we see the engagement, because, you put them first.
Fantastic. So Jill, can you top Paul's use of MoneyHub is the question.
I'll do my very best, Paul. Hi everybody, it's lovely to be here today to talk about the partnership the Big Exchange has with MoneyHub, which I'm delighted to talk to you about. So I'll start with the Big Exchange is a new business in the UK. We launched to the public in October. We're a direct to consumer business. So just like Paul's talking about, it's all about the customer for us. If the customer's happy, we believe that we will be a successful business. So to start with our mission, what it is that we want to do. So we want to create, promote and advance an inclusive financial system in the UK with the intention that it delivers a positive social and environmental impact. Now that is a pretty lofty mission that we've got, and we firmly believe that we can deliver it. Now, to start with, much like Paul, I'll talk about 3 separate problems that we've looked to address in launching our business. One is, how can we help people that have money invest it with impact so they can create that positive social and environmental impact with their money? And the second one is, how can we help people that potentially are excluded and have less savings? How can we help them become more financially resilient and give them access to wider products? Now, one of the biggest problems in our sector, particularly in the UK, is that the financial sector is full of jargon, and that in turn makes it less inclusive. People are excluded just because of the way that it's spoken about, the way it's discussed, and a lot of people step off getting involved because they don't understand what people are talking about. And not just that, there's a real lack of trust with the financial services and the traditional financial service providers in the UK around people getting involved. So we looked at those 3 problems and we thought, how can we really help each of these segments? So to start with, and this is what we launched in October, we launched an investment platform that only lists positively impactful funds. So there's 40 funds on there. They all are independently rated for the positive contribution they make to the UN Sustainable Development Goals. So really taking, what role has financial services got to play in solving some of the world's biggest problems? How can we help with that? In terms of money management, which is where we've partnered with MoneyHub, we're really looking at how we can help people that, there's 12 million people in the UK with less than £300 saved. That means that somebody's washing machine blows up, they don't have enough money to pay for a new one. So quite often what happens is they get into a cycle of unaffordable debt, and then that's very difficult to get out of. So what could we do that's really meaningful and action-led to help them? And also, how could we partner with somebody that allowed us to create solutions to those problems? So investments aren't the solution to somebody who has got a debt problem. How can we help with education, connecting them to different products and services that may be able to help them? So really looking at this, how can we create an ecosystem that's inclusive and can help people, like Todd said at the beginning, connecting people to the right products at the right time that's relevant to them, and it not just be about one particular segment, because throughout all of our financial lives, we'll have different ups and downs, and how do we make sure we're inclusive to everybody with the solution we offer? So I mentioned earlier the UN SDGs. It's really important to us as a business that we're constantly looking to what we're doing to help solve these world problems. So from poverty to good health and well-being, poverty is one of the main drivers for financial exclusion in the UK, as it will be for many other countries around the world. So how can we create a touch point for somebody who is currently in poverty or has recently is now experiencing poverty for the first time in their life, potentially as a result of the COVID pandemic? How can we provide them with an action-led solution to the problem? And we firmly believe with our Money Hub partnership, we can do that. Our investments offer us solutions to climate action, and Sam mentioned earlier that she's worked with other businesses on how they can start to really collate somebody's individual impact on the world, and that's something that we'll look to develop as we go through the journey with Money Hub as well. So we're constantly holding ourselves to account of what are the problems that we are trying to solve, and how are we helping people realise that they are actually able to provide the solution, and financial services has got a key role to play. So why we chose to partner with Money Hub. Again, at the outset, we talked a lot about disruption and democratization, and those are two really key things for us, and something that we really looked to when we chose to partner with Money Hub. Money Hub are disrupting the whole financial services sector in the UK in terms of really providing customer-led outcomes. They're looking to use the technology that they've developed to solve real problems for people, whether that be understanding how you're spending your money, where you're spending your money, how you might be able to improve your financial future, no matter how small that step is. And that was really key to us, that we partnered with somebody that was causing that disruption. And also somebody that had an established open finance product that we could look to. They had to be mission aligned, which we firmly believe we are with Money Hub, and we're all very passionate about using that technology to help everyone in society, not just those that already have money. And I think this technology has the real potential to disrupt the market and create social mobility in a way that sometimes you wouldn't necessarily associate with fintech. Speed to market is key as well. I think, Sam, we were 6 weeks in terms of, in fact, maybe even less than that, in spinning up the app. And then ability to adapt and tailor for our market, that's really important for us. That whole point about financial services often alienating individuals, we're really keen to make sure that we don't do, because often somebody can, at times when they're vulnerable, need, I think, and I do think that fintech provides this brilliantly, a level of anonymity that they don't, there's no judgment involved. They're engaging with technology that helps them and gives them an answer. They're not necessarily have to, step into a bank branch and declare that they're in financial trouble. How can we really use that technology for the best possible way to help people in that situation? At the same time as helping people that have money understand how they could make their financial future, even better. So the open banking allows us to create this digital wallet that Money Hub provide. Then people can categorize their spending, which when I did it at first, I was slightly horrified at some of where I'm spending my money, I have to say, and it's already made me recalibrate some of that. So I'm an example of somebody that has helped. You can set budgets and you can really start to get insights over time, in the same way that, lots of us are wearing a watch on our wrist that gives us insights into what our heart rate is, our resting heart rate, and how many steps we've taken in the day. Money Hub allows people to really see that, their financial health, in a way that's relevant, up to date, current. And that's something for us at the Big Exchange that's really important, is that people have that live view of what's going on in their financial world and start to really regard their financial health just as another indicator of their overall well-being, and allows them to take that action. Yeah, so how do we do that? So the behavioural nudges are a fantastic way to help people nudge users to avoid incurring further debt. So one of the great things that we can develop is a nudge that identifies if somebody's paying, 4 or 5 different loans, how can you nudge them to say, maybe you should consider consolidating this debt and bringing it all together? How can you create nudges that increases awareness around spending, whether that would be gambling, or I don't know, an unhealthy Deliveroo habits, which many people will have over the COVID pandemic. And then really empowering people to be in control of their own finances. And I do think that the more that we get to the point, in the UK, money is not spoken about necessarily in a way that is commonplace. People don't talk about it over dinner, and I think really breaking down those barriers and creating something that's in somebody's pocket that allows them to see that is really key. So yeah, for us, the partnership with Money Hub was a no-brainer in terms of what our overall business mission is. And we really believe that the open finance technology can help to transform the way that people interact with their finances. And that's key to us achieving our mission. So yeah, that's my glowing report of working with Money Hub, but also working with Money Hub to solve some real problems for people. And I think that that's key, is that it's fixing something for someone somewhere.
Jill, fantastic. Thank you very much. I have questions for you that, I will carry them on the Q&A side. And back to you, Sam.
Yeah, so I really just wanted to sum up and thank Paul, Todd and Jill for, hopefully for the audience, like bringing to life why Angela agrees with me. I know I should say it the other way around, but I don't. I think you should, it always helps when someone agrees with me, right? And Angela happens to agree with me on the fact that, this is her quote, that in the not too distant future, I believe nearly every company will derive a significant portion of its revenue from financial services. And Todd gave some great, I call kind of very binary examples of that at the beginning. I hope that the audience is now seeing that through Paul with Mercer's and Jill with the big exchange, that actually there's a lot more going on than just those big headlines, and that actually every company is going to shift in this direction. If you get time, Angela has got a 20-minute TED talk on this topic. If you're interested, I think it's well worth listening to that. But really, I just want to focus in on if we keep going, that really where this is heading from my perspective is that open finance data is going to power the future, because this is all about the consumer being at the center of the ecosystem. And I think that having an open finance platform that allows you to really service the customer in a way that they want to be serviced is really the key to ongoing success and the better outcomes for them. And I think if all of us can hang on to the next slide, Nicholas, that hang on to the thought that if you focus on the consumer and the outcome for the consumer, I really think you can't go too far wrong. I mean, I know that we get a lot of futurologists and people like that have all these great visions. We get innovation specialists in our big companies. But I always think if you can just keep it simple and focus on consumer outcome, you really can't go too far wrong.
That's great. That's great summary of the of Money Hub and the two users in Mercer and the big exchange. We're going to move now on to the Q&A side of things. So we're starting to get questions. If you have more questions from the audience, please keep them coming. I'm going to start with a question that came quite early from Nigel Dean. I think that question is probably could be for any of you, but how can open banking become a part of employee benefits provision for employees and for employers and employees alike?
It's got to be one for Paul, hasn't it?
Paul.
We'd argue, Nicholas, it is already.
Okay.
But and it is where you focus your time, effort, and energy on not just solving an employee benefits challenge, right? As an employer, when we talk to our corporate clients, what we talk to them about is, well, you spend money on employee benefits, you spend money on retirement planning, you spend money. Think more about an ecosystem that you as an employer can create, so that you then can build a clearer picture of what's going on in your workforce. Because just understanding, that 50% of your workforce take up one particular employee benefit and 50% don't, well, you'll know which 50% do, but one thing you won't do, if that's all the data you've got, is understand why the other 50% didn't. Right? And the more data you've got, the more you can understand how you can make your benefits programs more personal and more targeted to individuals, rather than just getting a shotgun out and having, you know, the sort of the spray effect that you get from a shotgun cartridge, and make it more like rifle shooting, where you can make the experience very, very catered for the individual. But I think our general steer is move away from point solutions and move more towards ecosystems. And the more you think about ecosystem and the totality of the data, the richer experience you'll be able to provide for employees.
Yes, I agree with what you just said. I think that's a field that many people are starting to question, where is it going to go, in which direction? We have a question from Leke Adebayo. I think maybe Todd could take this one. Todd, what are your thoughts on Africa and fintech innovation versus rest of the world?
I'm very excited about Africa fintech. In fact, if you take a look at venture capital funding in Africa, more than 50% of the funding goes to fintech. There's a lot, because there are many unbanked, there's a lot of financial inclusion fintech companies. So I'm very, very high on that. I mentioned Kuda Bank, which is the only digital bank in Nigeria, just growing like a weed. We talked about M-Pesa. There are many examples of great activities down there. In terms of making investments there are two organizations that I would recommend, both of which I invest with. One is called Launch Africa, based out of Cape Town, which is taking advantage of the big gap between early stage funding and Series A. If you want to reach out to me, or Nicholas, give me information, I can put you in touch. And the other is a company called Antler. Based out of Nairobi.
Okay, and we have another question. This is anonymous. What are your thoughts on robo-advisors? Who wants to answer that one?
I'll take that one. So,
okay.
So I think it depends a little bit on the country, because obviously there's different regulation depending on the country you're in. So I don't know where this person's from, but if I just put my UK hat on for a little bit, because it's probably not dissimilar, the thoughts that I've got from the rest of the world. But it is still, robo-advisors are still what I think very much product-led. So a lot of them have digitized the process that you go through with an advisor to buy an ISA or to retire. But actually, holistic advice is still beyond most of the robo-advisors' reach. So, like, you know, genuinely, you can tell me that I might need to pay a loan off before I should invest, so you can get it much better. But I still think robo-advisors are at the stage when do you remember you used to put everything in your basket, and then, you know, the browser would go and fall over on you, and you had to kind of think, do you know, am I going to do all that again? But it's still finding its way to being what I call a truly holistic ability to tell me as an individual what's the next best thing I should do with my money. So I think it's not quite there yet, but that doesn't mean we shouldn't do it. We shouldn't keep going, because there's only one way we're going to get the shopping baskets to actually stay and hold and keep going, is if we keep going.
Yeah, I would just add to that, Sam. I agree with you. I also think that there's disruption with some of the technology that MoneyHub have for robo-advisors, in the sense that if you start to see DIY investment platforms that are completely D2C integrate open banking technology, then the insights that you get from the data actually could potentially outweigh the robo-advice process that's been digitized. So I think that actually data-led decision-making around the transactions and the behavior that you have financially could cause disruption in that robo-advice market as well, because then you really understand a lot more about what somebody does with their money. And that's much more insightful than whether they answer yes or no to a question along a digitized process.
Yeah, and probably the one other thing I'd add to that is, I hope none of us ever have to fill out a fact find again. You know, that would be good if that can go, because we don't need to do that anymore. And the other thing I'd really like to see the end of, which I think hopefully robo-advisors can help with, is, you know, I don't ever want to ask anyone ever again whether they want to lose money or not before we take them on an investment. I mean, who wants to lose money? What a ridiculous question. And yet, apparently it has to be asked, which I would argue it doesn't. But there's ways of going about this, and the way we do it at the moment still feels quite archaic. But as we all know here sitting on this panel, if you say that you don't want to lose any money, you're heading into a cautious profile, because that's the bucket you end up in. And that genuinely may not be the best bucket for you if you've got 40 years left to retire. So I just despair at some of the things we still do in this world, which I really hope the robo world and the algorithmic world will address.
Thank you. Thank you. We have another question, this time from Santo Domingo, from Rosendo Alvarez. Hi, Rosendo. So is the digital divide a significant challenge in Latin America for the expansion of fintech adoption? Todd, do you want to answer that one?
Well, you look at, there's been a tremendous amount of acceleration in Latin America, given digitization. So it's great opportunity there.
I can probably add to that, Todd. I think maybe what this person's getting at is that, kind of like slightly a generational thing, where there's a group of people that are, because they don't have smartphones or apps, there's this disconnection or divide happening. And I'd like to think that technology will still underpin that divide by genuinely being able to connect and share, so that you can actually almost be a digital advocate for people that don't want to be engaged with their digital finances. So I'd hope that actually we can still solve that problem.
Yeah, as you know, I believe a lot of these things can become opportunities for smart entrepreneurs. There's another question here about how long do the incumbents have before the challenger banks actually start grabbing really more and more of the traditional big banks?
So I would turn that on its head and say that I think if you're a bank, you should be worried whether you're a challenger bank or a bank. So, because I think you've only got to look at this open finance platform that we've got, and we're not a bank, but we do everything that a bank can do. And we have an ecosystem and partners. So I would challenge the fact that if you have a banking license, you have an overhead that, Jill at the big exchange, Paul at Mercer's, and Money Hub, we don't have.
Yes. And one thing I've noticed in the various presentations from all of you is, which is very exciting, is how finally data is being used for the benefit of the user. And it's being, you have all this massive, and these companies have had it for decades. The Barclays, the Visas, and of course there's restrictions to what you can do with data, but you can see how you're using data in a way that would dramatically change the way people perceive money and the role of data in their financial life.
And just on that, Nicholas, I don't know how many people are aware, but the abilities to follow people around the internet, comes to a grinding halt by the middle of next year. It's already started. And by default now, you can only sign people up to the service that you are interacting with them. You can't sign people up to everything. So in effect, you're signing up to opting out now rather than opting in, which is what's happened to date. And so the way that we interact with people, consumers now, we really do have to start to get their buy-in. We can't piggyback on cookies and all sorts of other mechanisms that have been around. So unless you really do what I was suggesting in my presentation and start to get with the program and start to work with your customers in a way that they want to be worked with, I don't think you'll make it.
I think I'd agree with you, Sam, because for me it's about the value exchange, right? That people will allow you to see more data if you do things that benefit them as an individual. And the day that gets out of kilter is the day that individuals will just say enough and they'll move on.
Yeah, Jill, do you want to add something?
Yeah, the only thing that I would add to that is that I think, just to build on what Sam and Paul have said, I think the real key thing for all of us as consumers, as well as all of our customers, is if we're transparent about what we're using the data for, we will be trusted and therefore we can help people. I think the difficult thing is when it feels, you know, that you've looked at something on your phone and the next minute, you know, your laptop's giving you alerts about something that you've looked at on your phone. You start to think, hang on a minute, I didn't ask for that. Nobody asked me to do that. So I think for me, it's always about transparency. And one of the things that we do at the Big Exchange is we really simply tell people what we will do with your data and what we won't do with it. Yes, there's a privacy policy that's 5 pages long that the lawyers may, you know, we have to disclose to people, but at a high level, really sharing with people about what we will not do with your data. We won't sell it to somebody. We won't, you know, we're actually just using it to try and help improve your financial health. And I think that that's really critical for all fintechs to make sure that they lead the way on that, because that's where we will continue to have people's trust.
Thank you, Jill. Thank you. Unfortunately, it's 6 p.m. We have no more time, and I want to thank Sam, Todd, Paul, and Jill for all the insights today about fintech. Thank you very much for being with us today. It's been amazing, very insightful in every way. And that's it. That's it for today. I am Nicolas DeSantis. This is Corporate Vision, and we hope to see you in our next show of Visionary Talks. Remember to be strong in these testing times. Be safe. Have a great Christmas holiday if you can, and Tier 3. And we're all praying that 2021 will be a year where the world will be a better place for all. Goodbye to everyone, and thank you very much.
Thank you.
Thank you.
Are we staying on or heading out?
I have no idea. It says it's still live, so I suspect the safest thing is to go.
Lovely to see you.
Thanks, everyone.
Thank you, Jill. Thank you for telling me. I mean, you sounded great, and I'm really glad